Hello, everyone, and welcome to our first UFile Facebook Live event. I'm your host today. My name is Ida Celli, and we will be answering your tax questions. So simply at the bottom of the video, you have comments. You can write us your questions. Please be detailed, and we will have our very own Jerry Vitaratas answer your questions. Hi, Jerry. How are you?
Not bad, Ida. So first of the year, very exciting stuff. Let's see, what kind of questions we're going to get. Very excited to be here to be giving this Facebook Live. I know they've proven popular in the past. We've gotten some requests as well to do this again. So here we are. We're answering our clients' requests. So go ahead and ask us your questions.
All right. We just have some people coming in now, so let's give them a few minutes to give us their questions.
Perfect.
Actually, I have a question for you.
Yeah.
A couple who is separated and
Hmm.
have two kids, right?
Yes.
Can
Yes.
they each take one child as a equivalent to spouse amount on their tax return?
Yes, they can. So this is as per the folio of dependents. I can't remember the folio number specifically from the CRA, but as per the folio that relates to dependents, yes, they can, as long as they can prove that they're wholly supporting the dependent, okay, while they're living with them, right? So that's the key. That's the key marker there. Okay, so yes, absolutely, each one can split their own amount in a split custody or joint custody situation. However, the key is the children have to be wholly dependent on their parents for their needs. So yes.
Okay, good. Let's go to the next question. Vianney wants to know what's new for 2021. So briefly, maybe let's
Mhm.
go over the changes the CRA has for us this year.
All right, so let's display the question over here. So, what's new for 2021? So essentially, what's new for 2021? There's a few things that are new for 2021. First of all, what's old is new again. I guess you could say with the employment expenses, more specifically home office expenses, when it comes to temporary flat rate method. So that has been renewed for this year. So the government last year introduced a parallel method of claiming home office expenses for individuals that were required to work from home due to the pandemic. So the government has extended this. So you claim a $2 per day deduction for every single day that you're required to work from home. Okay. And now to meet that criteria, to be able to claim it, you have to have stayed at home and been required to work from home for at least 4 consecutive weeks due to the pandemic, due to COVID-19. Once you meet the 4 weeks, you count $2 per day for those 4 weeks and every other day that you're required to work from home. The government has extended the program and has enhanced the maximum deduction you can claim. Last year, you were able to claim $400. This year, you're able to claim $500, meaning you could claim up to 250 working days. Now, other changes that have come about is for those of you who have collected COVID-19 benefits, such as the CERB, such as the CRB. If you were overpaid those benefits and you repaid them, and let's say you repaid them the year following you collected those benefits, the government allows you to deduct the repayment the same year you collected the benefits. So, for example, let's say you collected CERB in 2020. You reimburse the overpayment in 2021. You could actually go back to 2020 and deduct the repayment that you made and cancel out your income in 2020. So that's another change that the government has brought about. Other changes: the enhancement of the Canada Workers Benefit. So the government has enhanced what they call the phase out.
Oops, I think we sort of lost a little bit. Jerry? So, Venny, we also have if you go on our blog on the ufile.ca page on our website, we do have a blog for what's new for this tax year. And I think Jerry is back in a few seconds. Uh, Hold on a second. I'll try to reach Jerry. Okay. I will just, I don't know if you can still hear me. Um, Joan, you were asking about the autofill my return. You need to be able to, you need to have your, oh, there you are, Jerry. You're back.
Sorry about that. Yeah, so I don't know what happened there. Just it's a third for a second. All right.
Okay.
So like I was mentioning, Canada Workers Benefit. It's an increase of the threshold of the thresholds in this case. So yeah, thank you for telling me that you could hear me. Unfortunately, I couldn't see anything. I don't know what happened there. So it wasn't loud, but I couldn't see anything for some reason. So
Okay.
so I'm back. So essentially, a single individual normally would see their credit be reduced starting from $13,000 and above. Now it's at $22,000 and above. And for families, it was at $17,000 and above. Now it's at $26,000 and above. That's the first enhancement. The second enhancement that the government made is what they call the secondary earner exemption, meaning that when you are determining the credit, whether you're eligible for the credit as a couple, you can expect to $14,000 of your spouse's income for the determination of the credit, meaning that you will be more eligible for the credit in that case. Okay, so those are some of the changes that have been brought about. Another one for those of you who are in Alberta, Saskatchewan, Manitoba, and Ontario, the Climate Action Incentive refundable credit is now a benefit. So you will collect it quarterly directly in your bank account instead of collecting it on your tax return. So that's another one of the changes there.
Okay. Joan wants to know about the autofilled my return. How do
So
we use it?
okay, so autofill my return. I mean, I can't really show it on the screen because I would have to log into my account and it simply wouldn't work. But within the software, autofill my return is very, very simple. The key is you have to be registered with the My Account portal of the CRA. That's the whole key to that. Okay, if you in order to sign up for autofill to be able to do it through the software. UFile is capable of doing it, but you have to have a My Account account essentially. Now it's super easy to do with a CRA. Simply go into the CRA, register. They're going to ask you a few questions that are based on your tax return, and then from there you simply log in through your bank credentials. Okay, so the government allows bank credentials to be able to get in. So for example, if let's say you have a Royal Bank account, you could log into your RBC account and you're logging in essentially to your My Account. From there, you simply trigger it in the software at that point, which is super easy to do.
Great. Now, Rishi Patini has a question.
Mhm.
He wants he wants to know how showing the crypto gains and losses. He usually I use Coinly to do the calculation, but is there any way to attach this report to all the transactions?
To attach it to the tax return, I'm assuming to attach it to your tax return directly. There is no way really. You just declare the capital gain. Okay, you enter the transactions directly in UFile in the capital gains section. In that case of UFile, that's essentially where you would need to go. Okay, but and it's a capital gain essentially. So whenever you make your exchanges at that point, it becomes a taxable capital gain, which means 50% of your profit would be taxable. The report as it's in and of itself cannot be transmitted to the government. Okay, so if you are audited, you have to hold on to that report so you could show your transactions. But otherwise, there is no way to transmit that to the CRA directly.
Okay, Lana Gale has a question.
Mhm.
I sold my house in 2021. Do I note this on the form somewhere?
Yes, you have to declare it as a principal residence sale, essentially, and you would designate your property as a principal residence within the software. Okay, so within the capital gains section, you have the real estate section there. When you go in there, you simply enter the transaction as is. So, in other words, what did you get? How much did you sell it for? What was the original cost? And then you designate it as a principal residence so that you can exempt the capital gains. gain, because the house that you lived in is normally exempt as long, but you have to designate it as a principal residence for the years that you lived in it. And that you do that again in the capital gains section of UFile. You choose real estate and other depreciable property, and then within that section, within that page, you're going to see a section for the principal residence, and you have to fill it in.
Okay, Simon, can I claim professional exam fees as tuition fees?
Yes, normally you can, as long as the institution in which you took the professional fees are recognized as an educational institution by the CRA. Okay, so you can look that up on the CRA website. Simply look up certified educational institutions. Okay, go in there, and then from there, see if the school is recognized, or wherever you did that exam is recognized as a certified educational institution by the CRA. And normally, yes, professional examination fees do count as an eligible tuition fee. But again, the school has to be recognized. It's not whether the exam is eligible, it's whether the school or the institution that you went to is eligible. That's what you need to check.
Okay, next question is from Stephen Reed.
Okay.
I have a question about property inheritance. My mother passed away in 2020. Sorry for your loss, Stephen.
Yep.
And she left her house to me and my sister. Our plan is to sell the property and split the proceeds from the sale 50-50. What do I claim as income when it is sold?
You're going to claim the capital gain. That's what you're going to claim. I'm assuming property, you mean a building, I'm assuming, or a home, is what I'm assuming in that case. So first things first, in your mother's return, there should be a transaction declared in 2020 for the sale, because the day that your mother passes away, there's a deemed disposition of the property the moment it gets passed on to you and your sister. Okay. Now, the reason why the government does this is to establish the cost for you when you will declare the disposition in 2021. Okay, or whenever you're going to dispose it. Maybe not 2021. You're saying you're planning to sell it, so which means 2022. Okay, so first things first, 2020, there should have been a sale recognized. Okay, so look at that transaction, and the sale happens at fair market value, at whatever the fair market value was as of the date of death of your mother. Which, by our condolences again for your loss. Now, whatever that fair market value was declared, or the disposition amount that was declared in the year in 2020 when your mom passed away, that becomes your ACB with your sister. That becomes essentially your adjusted cost base. So then, when you sell the property in the market in 2022 or whenever you will, okay, your adjusted cost base is the sale price of your mother's return in 2020. Okay, that's what you declared, and then it becomes a capital gain. Okay, it becomes a capital gain, which means the profit between the sale price of 2020, the paper sale price that your mother declared on her final return, and the actual sale price that you're going to sell it at later on. The difference between the two, you'll be taxed. You'll have to include, if there's a profit between those two amounts, you'll have to include 50% of that profit as taxable income on your return.
Okay. The next one is from Edward Sands.
Mm-hmm.
My mother has been in a CSHLD since August 2021.
Mm-hmm.
I received a tax form from the facility. Where do I input this form, as no schedule or reference was on the form?
Okay, that's a medical expense. Very simply, Edward. In this case, it's a medical expense. Okay, so now the key here with a medical expense when it comes to it's a CHSLD, which is the French acronym for the long-term care facility in Quebec. Is that in this case, again, it's a medical expense that you claim, but you have to be mindful of whether you are claiming a disability amount for your mother as well. It's I'm assuming if your mother's in a CHSLD, it's very likely that she's also disabled. She's considered disabled to the CRA and to Revenue Quebec. And in that case, you have to make a choice. Okay, you're either going to claim the disability amount, or you're going to claim the fees to the CHSLD, whichever is more beneficial. Now, considering that these fees at the CHSLD are quite high, and they're, I mean, it could go upwards of $2,000 per month, even from the month of August. It's likely that your medical expense would be more beneficial than the disability credit that you can claim on your mother's return. But that, again, you'll have to weigh it. You'll have to see which one it is. But you can't claim both on your return. You're either going to claim the CHSLD expenses, or you're going to claim the disability amount.
Okay. Next question is from Tom Martin.
Mm-hmm.
I'm helping one of my aunts on do her taxes this year. She's on Ontario disability, and her adult daughter lives with her, which is she's on Ontario disability. Knows about that.
Mm-hmm.
Okay. Her daughter helps out with the monthly condo fees by giving her mom $100 towards the fees every month. Does my aunt need to claim that $1,200 for the year 2021 on her tax return? If so, how do I go about it entering that within UFile online? And thank you for your detailed question. No apologies necessary, Tom.
That's what we're there for. So that means I'm just going to go through the question a little bit again, just getting to the big highlights. So I'm helping one of my aunts do her. Okay, so she's on Ontario disability, and her daughter lives with her. Her daughter helps out with the monthly condo fees. Okay, so my aunt lives in a condo by giving her mom $100 towards the fee. Does my aunt need to claim the $1,200? I don't believe there's any place to really claim that. I mean, she might be able to claim what's that Ontario credit again? It's I'm just going to it now. So don't mind me if I'm not looking at the screen. It's because I'm looking at my notes.
The
Uh,
Trillium?
yeah, I believe it's the trillium in this case. You might be able to claim the trillium in that scenario, but even then, you're very limited as far as what you can claim. I think you could claim a portion of the property tax, I believe, but not the condo fees. I don't believe that would be eligible. I know in Quebec you could claim some of those condo fees if they're related to taking care of the person, but I don't believe there's anything equivalent to that in Ontario. So again, if I understand it correctly, her daughter helps her out with the monthly condo fees by giving her. Does my aunt need to claim the $1,200 on her tax? Okay, so in other words, would this be taxable income on her return, on your aunt's return? No, it would not be in that case because it's a reimbursement of an expense. So it's not like she's making extra income in this case. It's a reimbursement of an expense that she has. So no, there would be nowhere to really put it.
Okay. Next question is from Jeanette Aquino. I have a sister who is disabled and am supporting her financially, but she lives overseas. Can I claim her for the financial assistance? I'm sending her money every month.
That becomes tricky because the fact that you're not living with a person, um, they're not wholly dependent on you necessarily, right? Because the fact that you're not living with them, you're not taking care of them for every single thing. I would say, my instinct would say no. In this case, because normally, whenever when it comes to these dependent amounts on the tax return, it's usually that you have to reside with that person. Especially somebody would have to be a resident as well. So my first instinct here would be no. Unfortunately, you would not be able to claim much or anything really on that because normally that person has to be living with you. They have to be wholly dependent on you in order to be able to claim that person as dependent in any sort of way.
Okay, next question is from Cindy Cook. My job is a full remote position. Can I still claim work from home expenses?
Yes, but Cindy, the question there is, um, uh, if you're fully remote, I'm assuming that is part of your basic working condition. Okay, so in that case, that means that what I mentioned before about the flat rate method is not applicable to you because the reason is you're not at home due to the pandemic. You're at home because your condition of employment is that you're working full remote. That's what I'm assuming now in this case. Okay, I'm just assuming that. If that's the case, then yes, you can claim work from home, and you're claiming what we call the detailed method. Okay, meaning that you're actually going to list your expenses, your eligible expenses, and what you can claim as far as eligible expenses is rent, is electricity, utilities, certain supplies you can claim, and your home internet access fee, and certain long distance charges if you have those in the course of your work. Okay, those are the example of expenses you can claim. Remember though that those expenses have to be prorated based on the square footage of your home office. Okay, so your home office in this case, so you take, for example, the area of your home office divided by the total area of your home. That becomes the percentage that you're allowed to claim on the expenses that I mentioned before. The other thing you have to determine is whether you are in a common area or whether you are in a designated room. Meaning that if you have, for example, a room that is dedicated to your work, then you're doing the proration based on the square footage only. But if you are, for example, I'll take my example. I'm in my living room right now, in my basement in my living room. You have to not only do the square footage of the room vis-a-vis the rest of your home, but then you have to do a second proration on the number of hours that you worked divided by the total number of hours per week. Okay, and then and the result of that becomes the percentage that you're allowed to claim on the expenses that I mentioned before.
Okay. Next question is from Angèle Rabillard. Can we
Mhm.
deduct the cost of the provincial fees as part of our medical deductions? I'm assuming she's
Provincial,
talking about
the medications, right?
yeah,
The prescription drugs.
yeah, the
Uh,
the the one that you're in Quebec, you pay the province. You don't have your
yeah,
personal plan.
exactly. So the RAM-Q amount, right? I mean, so
Yeah.
so which is charged on your tax return? The answer is yes. Okay, so that is an eligible medical expense on your provincial tax return and on your federal tax return. The only difference, though, is that provincially, you recognize the expense immediately, meaning that the expense that you're paying on your tax return is assumed that you paid it in the prior year. So in Quebec, whatever you're being charged on your current year tax return is what you're claiming as a medical expense in Quebec. Federally, though, it is when you actually paid the expense, meaning that when you're filing your 2001 return, you're filing it in 2022. That's the calendar year that you're filing it in. So whatever you're paid provincially on your tax return for that prescription insurance in 2022, you will actually only claim it in 2020 on your 2022 return. So it's kind of staggered, right? So again, Quebec, whatever you get charged on your return, on that same return, you are claiming it as a medical expense. Federally, whatever you're being charged on that return, you're claiming it next year on your next year's return because you paid it in the calendar year. In that case, 2022.
Okay. Next question is from Devin Place. My stepson turned 18 in March 2021. Can we still file him under our family tax return this year since he wasn't 18 for the entire year of 2021?
Yeah, you could leave him as a family member there. The only thing is, you if he's a stepson, I'm assuming you're married or you're with a common law spouse. I'm assuming in that case, remember that to claim eligible dependent, you have to have been alone at one point in the year, meaning without a spouse at one point in the year. Okay, if when your child turns 18, you're still allowed eligible dependent in the year that your child turns 18, because the criteria is that you meet the criteria at one point in the year, okay, or as the government calls it, any time in the year. So for eligible dependent, if you were married or common law throughout the year, you can't claim anything for that child. Okay, but if you became married or you became common law during the year, then you meet the criteria that at one point in the year you were without a spouse, meaning you could claim the amount. Now, the other reason you want to keep your child, even though they turned 18, in your file, is that you can still claim amounts on their behalf. For example, excess tuition fees. That's one example that you as a parent can still claim on behalf of your child, even though your child is not really necessarily a dependent. But if your child does not need their full tuition credit to reduce their tax payable to zero, you can claim the excess amount. If you leave your child as a family member in UFile, UFile will make this transfer automatically for you.
Okay, next question is from Dave. Is there a tax reduction for Ontario seniors who have made safety enhancement to their home?
Yes, brand new, actually, Dave. Yes, you're right on. It's actually Literally, in French, we say flambant neuf. It's brand new. Okay, it's the let me get the term right. It's the Ontario Seniors Home Safety Tax Credit. Okay, so that's the new credit that is about. Now, this credit, the joke that I always say, well, I train professionals as well when it comes to these courses, and I tell professionals a lot of times, basically, this credit is Ontario copying the federal government's homework. Okay, and that's essentially exactly what it is, because the federal equivalent to this credit is the Home Accessibility Tax Credit, which has been around for several years. Okay, this is an existing credit that's been there, but now Ontario has their own equivalent to that credit. Okay, so you're exactly right. These are expenses incurred to make the home more accessible and more safe for a senior who is 65 and above. But the good news is you could claim them federally as well. Okay, that's the good news as well. They're eligible for on both ends. Okay, now the credit itself, you're capped at $10,000 of eligible expenditures, and the credit rate itself, which I'm looking at right now on the form, is 25% of those expenses. Okay, on the federal side, I believe it's 10, or it's actually 15. Sorry, on the federal side, it's 15% of those expenses. Okay, so that's so yes, you can claim it. It's new, and like I said, it's called the Ontario Seniors Home Safety Tax Credit.
Next question is from Leo Guy Leblanc. If I had taken 2 weeks of vacation, can I claim the $2 per day also?
No, not for those days. No, it has to be a work day. Okay, the government is very clear on that. Okay, so for those days that you took a vacation, you cannot include those days in the $2 per day for the flat rate method. Okay, the government is very clear on that. So the key is, remember, the key term here is work days. You worked on those days. That's the key.
Okay. Tony, sadly, my mom went into LTC. We think if we are reading it correctly, the entire fees paid to the LTC is deductible as a tax credit.
So Tony responded. Okay, let me see, because I'm not seeing his question.
Tony Zamet, right under Guy Leblanc. Leo Guy Leblanc.
Why am I not seeing him? Okay. I'm not seeing the question. Okay, just repeat the question again, and let me
Okay.
see.
Sadly, my mom went into LTC. We think if we are reading it correctly, the entire fees paid to the LTC is deductible as a tax credit.
Yes, as a medical expense. Yes, but the key is, though, remember that if you're claiming disability at the same time, you have to make the choice. Okay, that's really the crux of it. There, you have to be very, very careful. I don't remember if it's 10,000 or and the amount. I'm just gonna go to I'm just gonna go directly to the folio and see what it says. But that's my understanding, is that you can't claim both at the same time. Okay, when it comes to what's called when it comes to long-term care facility, essentially, that's the key. So it's either disability or long-term care facility. But you're absolutely right. As long as you don't claim disability, you can claim the full long-term care facility expense as a medical expense.
Okay, next question is from Ilir Ranja. I'd
Mhm.
like to know where to put the universal amount of spouse.
Universal amount for spouse.
Are they probably talking the deduction amount for the spouse on the non-refundable tax credit section?
A spousal amount are we talking about, or I'm not sure what that means. Ilir, can you be a little bit more precise? Just add a few more details to that, because I'm not
Okay,
sure what you mean by universal amount. Okay, let's assume it's spousal. Um, what you would do is, within UFile, for example, you simply add your spouse as a family member. Very simply put. Okay, you add your spouse as a family member, enter your spouse's income, and if their income is below the basic personal amount, okay, then you will claim the spousal amount on behalf of your spouse. Okay, it's as simple as that.
okay. Next question is from Simon Lee.
Mhm.
Can I claim moving expenses when I move back from university after graduation, as my workplace is closer to my home than at university?
Yes, as long as the reason you moved is to get closer to a new job, okay, then in that case, yes. But the key is it has to be 40 kilometers closer at least. Okay, that's the rule. That's the floor that the government puts in. Okay, so the key is there. The reason that you moved was to get closer to your work, and you got you at least 40 kilometers closer. If you meet those two criteria, then yes, the moving expenses that you incurred are eligible at that point. And remember that they're eligible up until the point of your employment income, meaning you can't claim more expenses than the employment income that you gained at the new job. Okay, if you go above, if your expenses are more than the new job's employment income, then you carry forward the excess amount. Okay, to a future year. That's how that rule works.
Next question is from Zara Francisca. What happens if I put more money in my RSP than is needed, but within the limit that I have available for RSPs?
Yeah.
Is there any penalty? Does UFile limit the amount of RSP claim to the amount required? My situation is that I need to figure out how much to put in a RSP by the end of February, but don't have all the information yet to know what my taxable income for 2021 is.
Okay, so Zara, yes, and it's actually a nice segue that we're going to do with the upcoming, unless it's already there. I don't know if we posted the blog article on the RSP contribution date, but our next blog article, which is on our website ufile.ca, our next blog article is actually going to speak about that. Yes, so what you do is you can contribute up until your limit and not deduct the full amount. You're fully allowed to do that. If anything, that's what you're supposed to do. Okay. If you contributed an amount more than what you needed to deduct, but it's within your limit, you still have to declare that contribution on your return. But you simply tell the government that you're not deducting the full amount on Schedule 7. You're only deducting a portion of that amount on Schedule 7. This is actually literally going to be our topic for our next blog article, which will be posted soon on our website, which is on ufile.ca.
It
Okay,
should be
now,
posted by tomorrow.
yeah, exactly. So it'll be right there, and we even give an example of exactly your scenario. Actually, we even wrote an example about that. Now, in this case, I think I answered the question, or am I missing something? Does UFile limit the amount of RSP claimed to the amount required? Yes, UFile will do that. UFile will look at your federal tax owing and see whether you need the full deduction to reduce your federal tax to zero. If you don't need the full amount, UFile will limit the amount automatically for you. So there's no problem there, and we'll carry forward the difference to the future years.
Okay, Helio Ricardo Nichel. I receive oh sorry. I receive rental from a property abroad. How do I inform this on my tax? Do I inform in Canadian dollars or in the original currency? There is an agreement between Canada and my country to not double charge the tax. How do I inform it?
Okay, so yes, first of all, you do have to declare it. Okay, so we are taxed in Canada on our worldwide income, regardless of the source. Okay, regardless of the source country. So that has to be declared. Okay, that's number. Now, the way you declare it is yes, you have declared in Canadian currency. That's number one. Number two, you declared on the standard rental form, which is the T776. So even though it's not a Canadian property, okay, you're still declaring it on the rental form that's prescribed by the CRA, which is the T776. Now, on the double taxation front, you're absolutely right. Okay, the way you alleviate that double taxation is by declaring the foreign taxes that you paid in that foreign country in UFile. Okay, so within UFile, first you produce your rental statement in UFile. Then you're gonna add the foreign income section in UFile. Okay, and within that foreign income section, there's going to be an option for rental. From there, you're going to input the net rental income that you've determined on the appropriate form, which is the T776, and then you declare the tax that you paid to the foreign country on that specific section. And what UFile will do on the tax forms is it'll claim what's called the foreign tax credit. And the foreign tax credit is simply the federal government giving you a credit for the foreign taxes that you paid abroad. And that's how you alleviate the double taxation. Essentially, the government is going to give you a credit back for the foreign tax that you paid, and then we'll only charge you a federal tax on your return.
Okay, next question is from Diane Jensen.
Perfect.
I went over my RSP limit in September 2021. I didn't realize it until January 2022 when I transferred the surplus amount to another account. I have a receipt for the transfer. How do I deal with this on my UFile claim?
Okay, so she went over her limit in September 2021, but you're allowed to go up to $2,000 over. By the way, without any penalty there. I didn't realize until January 2022 when I transferred the surplus amount to okay. Well, the transfer of the surplus amount to another account, there's not going to be any tax consequences. You're basically doing an intra institution transfer. I'm assuming in this case. So at that point, that doesn't change, and it doesn't affect anything as far as your limit. You didn't cancel. You didn't cancel the contribution. All you've done is transfer it from one RSP account to another RSP account. To the government, you could have 100 RSP accounts. They don't care. All they care about is what did you contribute to an RSP account, okay, during the year. That's all they care about, to the cumulative. So it doesn't matter how many accounts that you have and where you did the transfer, you still over contributed. So the transfer does not cancel out the over contribution. Okay, now the good news is that when you fall into the new calendar year, now your new limit applies. Okay, so when you're going to file your tax return and you're going to get your notice of assessment for 2022, now you fall under the new limit as of January 2022. What we don't know is how much you over contributed in September 2021, and should you be subject to the over contribution tax for September, October, November, and December. Because remember that in January, your room gets reset based on the new amounts. So for those 4 months, you might be subject to an over contribution, and the transfer does not mitigate that. Okay, it doesn't matter whether you're moving funds between RSP accounts. The government doesn't care. It's what did you contribute to your RSP. Period. That's all they care about.
Okay, next one is from Megan Brooks. If travel allowance is included in my salary, it isn't. No, it's in the amount I declare on my T4s. Do I have to list the amount anywhere else on my return?
No, no. If it's already including your box 14, you're already being taxed on it. So at that point, you're fine. Now maybe it's part of an employment expense that you might be able to deduct. So maybe you got a travel allowance because you were required to travel due to your work. If that's the case, then it becomes an employment expense that you can deduct because you've been taxed on your travel allowance. You are now entitled to deduct the travel expenses that you incurred for that trip. But the key is, though, you need the conditions of employment form from your employer that stipulates that you were required to pay for expenses out of pocket for your travel, okay, as part of your condition of employment, okay, which is the T2200 form. So you would need that signed by your employer, and then you'd be able to deduct your travel expenses. The allowance itself is already including your bucks 14. Nothing more to do on that end.
Okay, next question, Kevin Lockhead. Why is it required to report sale of a property now?
Because the federal government said so. It's as simple as that. There's really no other there's no other reason. Now, if I were to wear the government's hat for a second and to understand the logic, because it's true, in prior years before 2016, if you were selling your personal home and you were designating all the years that you lived in it as a principal residence, the government didn't require you to declare that sale. Okay. Since 2016, now the government is requiring you to declare the sale, even if you have no taxable income to declare. The reason for this is when the market started getting really hot. Forget 2020. The market's been getting hot for quite a while now. Okay. 2020 was the peak, and 2021 was the peak as well. But the market was hot before that as well. Okay. Now the reasoning for the government is they want to catch essentially house flippers. That's really the big reason why the government is requiring that declaration. Again, this is the logic. This would be the logic in this case that I could think of for having to declare the disposition. Unfortunately, that's what it is. Federal government decided that we have to do it, and like I said, they're trying to mitigate house flippers who were declaring personal residences when they were flipping these houses for a profit and not declaring the capital gain.
Okay, Rishi I know some people have been answering you. He was the one with the
Yeah,
cryptocurrency. He
yeah.
has multiple transactions. Um,
Okay, so yeah,
so I'm
so
assuming they want to see the details. We'll definitely get audited if I just put all the entries on one line. That's what he's worried about.
no, actually, no. When you transmit the return electronically, the government only sees the totals. Even if you enter the 10 transactions, 15 transactions in UFile, when the file gets transmitted to the government, all they see is the totals. That's so you don't have to physically put in the totals. You have to keep the summary though. You know that you have to keep in case you get audited. Okay, but as far as when you transmit the return, and that doesn't matter whether you're using UFile or one of our competitors. This is as prescribed by the CRA, the way they've set up the forms. Okay, when you're transmitting electronically. Okay, all they see are the totals. That's the only thing they see. They don't see the details of the transactions. So no need to put in the details. You don't have to.
Next question from Bill. How can I see the full with my iPad? So I'm assuming he is trying to use UFile on his iPad. Um,
Or
I
maybe trying to see us through his iPad. Maybe I don't know.
Yeah, Bill, can you
Mm,
be a little bit more specific, please? Sorry, we
yeah.
took a little bit time to get to your question. Next one is Christine. My first
Okay.
time reporting income as an independent
Independent contract.
contractor.
Okay.
What forms do I need on UFile? Also, I intend to claim home office expense. Which forms do I need to complete?
Okay, so it's one form, whether it's home office expenses or the fact that you're independent. I'm assuming your home office expenses are related to the fact that you're an independent contractor. Okay, so in that case, the form itself is the T2125. Okay, so that's the business form that you need to complete. So within UFile, you go to the interview setup section on the left hand menu. And on the page to the right, you're going to choose self employed income. You're going to tick that box. Click next at the bottom of the page. And once you've clicked next, the business income section will appear on the left hand menu, on the navigator menu. Just click on that and then choose one of the three options, whether you are commission, business, or professional. Choose one of the three and then complete the form and complete the sections. Within those sections, you'll have your home office expenses there that you'll be able to input. You'll be able to input your expenses. So it's all within the same form. T2125.
Next question from Diane.
Mhm.
I have only used UFile once last year regarding medical claims. Do I just make one entry for the total of 11 receipts or do I have to enter each one separately?
All right, so this is let's keep this a secret, everybody. All right, so keep this keep a secret. It's us, the virtual walls over here. When you transmit the return, when it comes to medical expenses, the government does not see the details. Okay, when you're transmitting the return, all right. So you could just enter one, but the key is though you have to keep all the receipts though. Okay, you can't simply make the claim and then say, okay, I'll throw them away. Because if you get audited, and medical expenses do get audited frequently. Okay, medical expenses and donations are two areas that the CRA will audit very frequently. Okay, especially during your summer vacation. Okay, in the month of July, they always choose the worst possible month to check these things. Okay, but the key is you don't have to enter all 11. You could sum them up, just put the summary amount, but keep them in case the government asks for them in an audit.
Next question is from Edward. It's a very good question. Okay. I have used my RSP contribution limits in preparing this year's tax return. For any bonuses that I get this year, can I open up a spousal RSP and next taxation year, can my spouse claim the full RSP amount?
Yes. However, there's a catch. The catch is it's based on your room, not your spouse's. Okay, and actually, it's not your spouse that's deducting it. It's really you're the one who's deducting the spousal contributions, not your spouse. Okay, but it is based on your RSP room and not your spouse's RSP room. Okay, so you have to have the room to be able to contribute to your spouse's RSP. Okay, that's number one, and you're the one who's claiming the deductions. What's going to happen is when your spouse withdraws the RSPs, then it's your spouse that will get taxed on those withdrawals and not you. Okay, and that's the advantage of doing spousal RSPs, is that if you know, or if you're really sure that your spouse will be in a lower tax bracket when you start withdrawing from those accounts, then it is obviously more beneficial for your spouse to pull them out than for yourself to pull them out. But at the contribution stage, you are the one deducting the contribution, and it's based on your room, not your spouse. So there's no real, you can't split the deduction. That doesn't work for the CRA. That doesn't exist.
Okay, but just maybe quickly give a brief description between creating a spousal RSP and having her own separate. Then that would be different.
Yeah, well, yeah, but again, it doesn't matter. In one way or another, when you contribute to even if you create a new account for the sole purpose of making those contributions, again, on the tax return, like I said, you could have a million RSP accounts to the government, but they don't care. They don't care how many RSP accounts you have. The key is that you made an RSP contribution. That's all they care about. They don't care which account you used. The key is, though, when you make the contribution, only you can deduct it, and it's based on your room, not your spouse's. The advantage is, at later on when you retire and your spouse is in a lower tax bracket, he or she will pull out those funds in the lower tax bracket, and that's where the advantage comes in with a spousal RSP.
Next question is from Robert, the autofill. I am
Yes.
in Quebec. When I do a CRA autofill, it sometimes populate the Quebec releve amounts, and then when I do the revenue Quebec autofill, it doubles the counts. Is this fixed? So
For that, I'm gonna be honest with you. I wasn't aware that it was doing that. To be honest with you, I wasn't aware offhand that it was doing that.
I've heard occasionally it does that, especially when the name of the releve one and the T4 are not identical. Then sometimes it considers it as two different slips. Um, our suggestion: download the T4 from the CRAs. Go into Quebec, download anything that's not the same. Just go over and review the amounts and add in the amounts that are missing. I think that's the best way to do it right now. I know the government was looking into getting that synchronized better.
Perfect.
So, do you have anything to add to that, Jerry? Sorry, I took
No
out.
offhand,
I
no,
took
not
I
really.
took this from you.
Not really offhand. No, it's okay. No, no. I mean, you're more aware on this
Yes.
end than I am. So no, offhand, I don't have anything else as far as that. There's really nothing else. It's just yeah. Sometimes there's a mismatching of the slips. Remember, the program is only downloading whatever the government's giving it. It's not necessarily something that's from the software. Okay.
Okay. Next is from Mark Jacob. I
Okay.
sold property and made a gain. What item of capital gains would it be? Is it just bare land and not a residence, or what is it taxed at?
Okay, so I'm assuming property is land. That's what I'm assuming here? Is that it's not a building, it's land. Then it's real estate. You're going to choose it as a capital gain under real estate. So it's the same place as if you sold a building. There's no difference there. You add the capital gain section in your interview setup in UFile. When you go to the capital gain section, you're going to choose real estate and other depreciable property. Go in there and just enter the transaction details, whatever you got, whatever the original cost of the land was, and it becomes a capital gain in that case.
Next question is from Daniela. My
Mhm.
daughter is 25 and live with me and my wife. Can she still be considered as dependent, or she needs to file a separate tax return?
Well, it depends on the amounts. It depends on the amounts that you're trying to claim on her behalf, right? So. First of all, at 25, she no longer falls as an eligible dependent for the credit. Plus, you mentioned here that you have a wife, which means that you're married or common law, right? Or at the very least, but wife means married. It means legal marriage. So you are legally married to the government, which means the moment you're married the whole year, there is no eligible dependent. Number one. Number two, she's 25, which makes her automatically ineligible because she's too old at that point, unless she has a disability. That's the only time you'd be able to claim her. But again, you're married, so you have two things that cancel your eligibility for the credit. You have two areas. Now, what you could claim on her behalf you or your wife can claim on her behalf is, for example, other amounts like medical expenses that you paid on her behalf. Other example would be tuition fees that you paid on her behalf. So, for example, if your daughter does not need her full tuition fees to reduce her tax to zero, then the excess amount you or your wife can claim in this case on your own return. Okay, so these are examples of amounts that you can still claim for a child that is well into adulthood.
Okay, Diane, I guess just wants a quick clarification for her medical claims.
Mhm.
Yes, you can
Yes.
put the total amount on the line on the software, but you need to keep all the receipts if just in case you get audited,
Yeah,
right?
exactly. Yeah, exactly. Because when you transmit, the government doesn't see the details. And that's why medical and donations are audited so frequently, okay, by the CRAs, because they don't see the details. They don't know when you're transmitting the return. So if the amounts are high, they'll double check. And usually they'll check in July. So don't make a lot of vacation plans in July, okay, if you have high medical expenses, because it's very likely the CRA will audit you on those expenses. As a preparer, and Ida, you were a preparer as well, we have a long history of that. That's why you'll notice preparers always take their vacations in May and June because they have to be back in July for those audits. So the key is though it's one line. Yes, claim, but keep your receipts. Okay, in case you get audited.
Okay, next one is from Mariam.
Okay.
I missed to claim my eligible dependent for 2019 and 2020. Special circumstances. My husband and I had a temporary separation for less than 3 months, and the kids were with me. And
Mhm.
when I tried to change it on my account, I cannot see line 3400
Yeah.
in the list of changeable entries, and I don't know where to change it at.
Okay. For that one, Miriam, you'll have to likely do a paper adjustment, which is the T180J. Okay, so the program has it. Okay, so within the program, I'm just gonna look at it real quick to see in which section it does it. Um, Let me just go here, and I'll tell you exactly which section you would do it in UFile. Okay, but if you're remember, just take down the form. It's the T180J. Okay, so the form is called the T180J. That's the one you need to do, and you're likely going to need a lot of corroborating documents. Okay, you will have to show to the government that you had the separation. You'll have to put a letter with it that explains your situation and why you are eligible for 19 and 20. So you can go backwards. You're allowed to do it through, like I said, an adjustment, which is the T180J. Okay, but the key is you will have to explain. Okay, and it's very likely the government's going to ask you more questions. This is not something that the government will simply provide right away. So in the interview setup, okay, of UFile, you have to go to the section which tells you for an adjustment. Okay, so you go into the interview setup, and I think towards the bottom, you will have a section or a tick mark to make an adjustment. Okay, in that case, you will have an adjustment request, and then from there, the program will provide you with a line number, which UFile's adjustment will provide you with 30400. It will provide it to you, and then you will simply, put the old amount, the new amount. But then I strongly suggest you create a Word document with a letter that explains exactly the situation, what happened exactly, and why you are eligible.
Okay, Jeanette Aquino, did I answer your question? You said you have a message here that we skipped your question. I believe I did answer it. We did
Yeah, we did.
pick her up
We did.
earlier.
Yeah. Yeah, we did. Yeah.
Okay, Diane Stewart, are short-term disability payments considered income? Do they need to be reported on the income tax return?
Yes, normally yes. You should have either a T4E or a T4A. You should be getting a slip from whichever government agency that paid you, whether it's provincial or federal. In this case, and yes, they are tax. It is taxable income. You should be getting a slip for it.
Okay, Joan Douglas, I am 82 years old, my husband 87. For the Safe Homes credit, are we able to claim a HEPA filter and tankless water heater as a credit? I had pneumonia a couple of years ago and can breathe easier because of the HEPA filter.
That's a really good question. Offhand, I'm not sure. I'll be honest with you, Joan, because there's a lot of things that are eligible. There's like a whole huge grocery list from Ontario. I'm just going to try to see real quick, although we've got quite a few questions that we need to get to. At worst, Joan will answer you. Will answer you in the chat. Okay. Well, I'll do my research on it and I'll answer you directly in the chat because I want to make sure we get to all the questions because I think we're a little bit behind on the questions and our thing is going to end pretty soon. So Joan will answer you directly in the chat.
She's also asking, is there an income level to apply for the Ontario Energy and Property and Tax Credit?
Not offhand. I mean, you could apply either way. I think the application is even automatic now because it's part of the Trillium benefit in this case. It's an automatic benefit, but no, not necessarily. I mean, I think there is a threshold as to whether you are eligible or not. But otherwise, no, not offhand. No.
Okay, Bill, I have a disability certificate. Can I claim medical expenses? And he's also asking, my pension plan reports the premiums I pay for medical and dental coverage. The total amount is reported on my T4. Do I report these?
Okay, so first of all, disability certificate. Can I claim medical expenses? Absolutely. You can claim medical expenses even without a disability certificate. What the disability certificate allows you to do is claim certain other medical expenses. Okay, additional medical expenses that other individuals that don't have a disability certificate can claim. The other thing you can claim with a disability certificate is a disability tax credit. Okay, which is a non-refundable tax credit that you can claim, which is upwards of $7,000 to $8,000 at a 15% clip. Okay, so that's what you could also claim. Now, for the second question over here, which I'm displaying, so my pension plan reports the premiums I pay for medical and dental coverage. The total amounts reported on T4. Do I report these? Yes, they're eligible medical expenses. Whatever you paid as a medical insurance premium out of your pocket is an eligible medical expense that you can claim. If they were indicated in box 85 of your T4 slip, UFile will pick these up automatically and claim them as a medical expense for you. Okay, there's no need to re-enter them in the medical expense section.
Okay, Vincent wants to know, is autofill working? Yes, as far as I
Yes,
know,
it should be
yes.
working right now. Yeah, it should be. Remember, it starts. It started on Monday. It's on February 21st when that starts. Although sometimes they did stagger it a week between Netfile
Mhm.
and autofill.
The
Sometimes that
autofill.
happened as well.
Okay, Ronald, any tips for the first time rental income property owner? Difference between capital expenses and expenses? Oops. Did we lose Jerry again? Let me see if we can get. Oh, he's back on.
I think I'm back. There.
Yes, you are.
Sorry about that. Going. All right. So what's the next question?
The question was, any tips for the first time rental income property owner? Difference between capital expenses and regular expenses?
Okay, well that's an interesting question as far as difference between capital and current expenditures. There's a few criteria that the CRA will use to determine whether it's capital in nature or whether it's current in nature. The biggest ones that the government really considers is first of all the relative value of the cost. Okay, so for example, if the value of the expense is high relative to the total value of the property, then it's usually a capital expenditure. You add it to the value of the property and you depreciate it. Okay, other examples is if it's a maintenance item or if it's an improvement. Okay, so if it's, for example, something that was functional but you're making it better, then it's a capital expenditure. If it was something that was broken that you fixed, it is current in nature. Okay, so these are some of the examples between rental, between a capital and current expenditures when it comes to a rental property. The other suggestion I would make is do not depreciate your property as an expense on your tax return. The reason being is that we've seen that the housing market is absolutely on fire right now. And if you decide to sell your property in 3-4 years and you sell it at a profit, whatever you claimed as a depreciation expense, you'll have to pay it right back when you sell the property later on as a recapture. Okay, so don't do it. Do not use depreciation as an expense on your rental property. It's not worth it in
Yeah,
the
he's
long run.
also asking about replacing a furnace that broke last year.
A furnace that broke last year. Well, if it broke, then it's a current expenditure. That means it's maintenance. Okay. Now, if, for example, you upgraded from an oil furnace to an electric furnace, that becomes capital in nature at that point because that's an improvement. The oil furnace was working fine, but now you decided to improve it. Okay. But if it was broken and you fixed it, current expenditure. You're expensing it immediately on your return.
Next question is from Marilou. I work from home 3 times a week and only use part of my kitchen table to work. Can I still get a reimbursement on that? Work
Yes,
from
you're going to
home.
claim. Yeah, you're going to claim it as a home office expense. Just like what we spoke about before. Okay, that's essentially what it is. In this case, if the reason you're working from home 3 times a week is because of the pandemic, you're even entitled now to the temporary flat rate method. Because in this case, you're more than 50% of the time, so you meet the criteria of the flat rate method, which means $2 per work day that you work from home. But what you're claiming those the 3 days. You're not going to claim the 2 days that you worked at the office. You're only going to claim the days that you're required to work from home. $2 a day for those days. Okay, and it's not a reimbursement. You're claiming the expenses which you can deduct off of your taxable income. That's what you're claiming as a home office expense.
Okay, Christine has 2 follow-up questions. She's the one that's the independent contractor. Um, she was also asking how does she compute the CPP contributions?
Okay, as a self-employed individual, I've got a very simple answer. You let UFile do it. It's as simple as that. UFile will compute that automatically based off of your net income. So there's nothing for you to do. UFile will take care of that. Okay, once you enter your business income.
Okay, Diane came back with I transferred to a non-RSP account, so that was the one that she over contributed to an
Okay, so
RSP.
so did you? Okay, but is that transfer a cancellation of your contribution? Because there are special forms that you have. You usually have a certain number of days where you could cancel the contribution. The question is, do you have one of those forms that cancels out that contribution? If that's the case, then you have not over contributed at that point. It's what we call a refund of premiums at that point. But if you don't have that, if it's not a cancellation, then unfortunately it still counts as a contribution in that case. And actually, in this case, it might be even a withdrawal. Although you transferred it, chances are it's not a withdrawal. Is it a refund of premiums or not? Did the financial institution create a specific form to indicate that it's essentially a cancellation of the contribution? That's really the question now.
Okay, next question is from Brian Kelly. Can
Okay.
I claim expenses I forgot to put on my on UFile last year?
Yeah, as an adjustment. Okay, you could do it as an adjustment, or you could do it as refile, or you could refile your return. I'm not sure if in UFile we could refile returns. I know on the professional side we can. Um,
Yeah, there is a function to do it, but
yeah,
of course, if you're refiling the 2020, you need to wait for, well, obviously you have to have received the notice of assessment, and then within the software, there's a way to do it,
yeah, exactly. So you can
to
refile
refile
your
it.
tax return. You just make the changes and you refile it. Just look it up in UFile directly to see how to do it.
Okay, Mark Jacob in the T2200 work from home, the amount used for personal use
Yeah.
is the rest of the house, like
Yes.
100% with the work from home square amount. So
Yeah.
if you use 100 square
Yep.
feet of 1,000 square feet,
Mhm.
you would put 90% in the box of personal use.
Yeah. Absolutely right. Yeah. Mark, you're absolutely right. That's exactly what it is. So whatever percentage you compute, based on the rules that I mentioned before, which is the square footage of the home office divided by the total square footage of the home. Okay, then whatever that percentage is, you take the opposite percentage, and that's what you input in the software.
Okay, Bill, I am using UFile on my iPad. I can only see the first column. How can I see the comparable amounts in the extended column? Oh,
Okay, well that would be on the browser, right? I mean, I would assume that would be a browser because on the iPad you wouldn't be able to use the local installation version, right?
no, he
So
probably using the
yeah.
online, but obviously the screen is not probably wide enough to see everything
Mhm.
nicely. It's
So that would be
always
your browser settings. That would have to be your browser settings in Safari, I'm assuming. That's what I'm assuming in this case. Okay,
okay.
yeah, it's the same one there. Okay, next
Okay,
question.
next one, Linda. My daughter moved to university more than 200 kilometers far away from home. Can I claim moving expensive? If yes, what can I claim?
In theory, yes, you can. If you moved due to a new job or due to university, you can. However, there's an extra condition when it comes to moving due to schooling, and that's if you received a taxable scholarship. Okay, so if you have a taxable scholarship, then you can deduct them against the taxable scholarship. If not, normally you cannot. However, there is a bypass to this. I literally read it 5 minutes ago because I was writing an article about it. I literally read it 5 minutes ago. The bypass is if she found a job there, okay, then that's the bypass, because then your reason could be that she moved there due to the new job, okay, at the other place, and not due to the university. Okay, so if she's got employment income at the new 200 kilometers away at the new university, then she's fine. She can deduct her moving expenses. But if she moved there and has no other source of income, let's say you're funding her directly, and she didn't receive a scholarship at the very least, then you cannot. Okay, that's the rule.
Okay, next question is for Alex. How can I
Okay.
claim the losses carried forward when you actually dispose of your interest in the property, i.e., your shares in the company? My company was dissolved in 2021.
Okay, so this is your company. Okay, now okay. So Alex, you're treading in very deep waters in the income tax sphere. In this case, again, there's a lot of criteria, but my suspicion is you would fall under what we call an ABLE, an allowable business investment loss. So that this was a small corporation in which you had the shares and you've dissolved it. Basically, the company's not worth anything. Okay, the company did not. You dissolved the shares of the company. Then you fall under an allowable business investment loss. So within UFile, you're going to go to the interview setup. You're going to choose the capital gains section. Okay, like as if you got a standard capital gain. And then once you go there, amongst the choices that you have, it'll give you stocks, real estate, personal use property. You're going to choose allowable business investment loss, or ABLE. Now, it's not an automatic that you'd be entitled to an ABLE. There's many more criteria that come with it. Okay, and ABLE basically is you have to prove that you have what the government considers that you were at the time of sale a small business corporation, meaning
Oh no, we lost him again? Let me just send him a message. We'll get him back. As you can tell, this is really live. So he will be right back to provide um, complete your question. Miriam, I think we did answer your question already. So I keep seeing some people re-asking the same question. So Miriam, I think we did answer yours. So I will skip it now the second time I see it. And he's coming back online.
back. I'm sorry about that. Okay, so just to come back to Alex's question, it's likely to be an ABLE loss, allowable business investment loss. So capital gains section in UFile. Okay, once you're in the capital gains section, first of all, choose the capital gains section in the interview setup. Okay, once you get into the capital gains entry page, choose the option allowable business investment loss. It is likely that, however, there are other criteria. So go to the CRA website and look up allowable business investment loss, or ABIL for ABLE. Look it up and see whether you meet all the criteria. It's likely to be that, because when I hear you say my company, I'm thinking it's a small private corporation. If that's the case, then it's likely to be an allowable business investment loss.
Okay, next one is Bill wants to know, where do I enter in new file the amount in box 205 of the T4A from Service Canada?
Okay, so for that one, what you're going to do is, because we're kind of pressed for time, I can't really share the screen right now. What you're going to do is here, you're going to go into, so it's the T4A slip that you have, okay? So in the T4A slip, you're going to see a box called box 28 plus, 028 plus for additional information. There's a drop-down menu in that box. click on it, and you're going to see box 205 where you could enter the income. It's likely you got a COVID related benefit, I'm assuming. Usually that's what these boxes are. So again, in the T4A slip, go to box 028 plus that says additional information. There's a drop down menu, choose 205 in that drop down menu, and enter your amount.
Okay. While you put up Diane's question, Diane Stewart, I'll read it in a moment. Vincent, you're saying you keep getting an error message. Please email support ufile help at ufile.ca.
Yeah.
Reply to the automated email you will receive. At the same time, in on our Facebook page, go into Messenger, send me your name, request number, and email, and I'll follow up with support for you. Diane Stewart, her question is: the short-term disability payments were from a company insurance plan and paid out while missing work due to a stroke.
Okay, so then
So,
that insurance company, Diane, has to send you a slip or a receipt that indicates the income. Okay, they have to send you something. Normally, it's a T4A. If I were to bet on a specific slip, it's going to be a T4A that you should receive from them. Okay, and you'll be able to declare it in UFile.
okay, we are a little bit over schedule. We will stop taking incoming questions. We will just finish what we have rolling in that are already posted
Yeah.
here. Next one is from Carol. I bought a used vehicle last December and paid 471 tax on it. Since I am disabled, can I claim any of this amount as a tax deduction? And if so, where do I enter it on my tax return?
And unfortunately, there's really nowhere else unless you used it for business or employment purposes. There's really nowhere you could really claim that. I don't believe you could claim it as a medical expense unless it's like unless you make changes to it. Picture like, for example, you buy a van. Let's say you buy a like a minivan, for example, and you make alterations to the minivan to make it more accessible and make it wheelchair accessible. Then those alterations are eligible, but the vehicle itself is not eligible directly.
Okay, next question. Whoops, I lost one. Pamela.
Mhm.
S- Pamela, yes, I have been paying medical insurance premiums for years. How many years can I report, and how do I do this?
Well, you would have to adjust, right? You would have to adjust your previous years. You can go up to 10 years back. Okay. You could either do it through refile. So, actually, to be honest with you, with medical expenses, your best bet is just create a My Account with a CRA. That's the quickest way of adjusting and getting your money back. Okay. So, go to My Account with a CRA, and you go to the adjustment section of the My Account with a CRA. And once you're in there, you should be able to, in this case, claim for those medical expenses for those years, and you could go up to 10 years back.
Christine, thank you for the comments. Next question, Simon Lee. Any over contribution RSP? No, over contribution. Sorry, any over contribution of RSP less than 2,000 is deductible. Would that affect the contribution limit taxation next year?
No, first of all, it's not deductible. You cannot deduct more than what the government allows you to deduct. What the $2,000 limit mentions that the government gives you a cushion of $2,000 where you don't have to pay an overcontribution tax, meaning that if you contributed your limit amount plus 2,000, you're not subject to an overcontribution. Anything above that $2,000 buffer is subject to the overcontribution tax, which is 1% for every dollar that you're above your limit per month. Okay, that's essentially how that would work. Okay, how does it affect your limit next year? Well, it becomes the carry forward of an unused deduction for the following year. That's essentially how that works.
Next question from Mark Antonio. Can I claim renovations in the condo that we live? Is a renovation for all the building, rain screen?
Unless you're using the condo for rental income, or it's your home office for your business, no, you cannot. There's nothing you could claim because remember that if it's your personal home, remember that the sale of that condo later on will be tax free, right? So at that point, there's nothing you can deduct on something that is not taxable at its base. Okay, so that's how that works.
He actually wrote each one of the owners paid a proportional part of the total cost.
But again, Is it a rental? That's the question. Are you using it to make income? Is it a home office for your business? Right? That's the question. If you're not making income off the property, whether it is through your business income in your home office or whether you're renting it to somebody, you can't deduct any expenses. You're simply not allowed.
Okay. Fola has two questions. How can I claim depreciation on rental property?
Okay, so depreciation on your rental property essentially is within UFile, you have to indicate it in what we call a CCA class or capital cost allowance class. So when you're in the rental property in UFile, okay, what you're going to do is there's a section usually within that rental property called CCA. You click on that, you choose a rental building is category one. Okay, it's class one at 4%. Choose that, and then you have to enter the value of the property. Okay, normally you do this when you bought the property. So when you bought the rental property, you make what's called an addition, okay, to your CCA table. So you make the addition, and at that point you start. And then from there, based on the value of that building, you claim the depreciation expense, which is 4% of the value of the property per year on a declining balance.
Okay, and his next question is filing income for deceased that died in 2022. Can I file the tax now or wait till next year?
It depends when the person died. Normally, you could wait. You don't have to file it right away for the 2022. I believe your deadline is April 30th. If they died at any time, April 30th of the following year, if they died at any time between January 1st and October 31st. And if they died in the last 2 months of well, we're in 2022, which means they died now, right? In the first 2 months. So no, you can wait till next year for that one. It's April 30th of the following year.
Okay, and our last question for today is from Joe. I
Mhm.
bought a Starlink to be able to use internet at home for work. Is that deductible as an expense?
Starlink to be able to use internet. I'm assuming
I
that's a
believe that's a
hardware.
modem. That's a
That's a
modem or
modem,
something.
right?
Yeah.
That's a modem. The answer is no. The government's very clear on that. When it comes to home office expenses, you cannot claim the expense of equipment. You're not allowed. You can't depreciate them either. You're not allowed if it's for home office expense. Again, home for work, meaning you're an employee. Then at that point you cannot. If you were self-employed, that's different. At that point, okay, that would be different. But if you're an employee, the answer is no. It's very clear by the government.
Okay, that concludes all our questions for today. Thank you, people, for giving us your appreciation of of these sessions. It's really
Yeah.
appreciated on our end.
And thank you for your patience as well. Unfortunately, I've had some technical problems today.
Well, it
You
proves
know,
that we are live.
yeah, well, yeah, we're live. Yeah, for sure,
We're
we're
live.
live. Yeah, absolutely, absolutely. So,
So
so just to mention,
go ahead.
remember that a lot of the info that we talk about here, we post some really interesting articles on our UFile blog at ufile.ca. Please do not hesitate to go to our website and check out the blog. Okay. We also have a podcast, and we're also expanding our YouTube page. So we're doing some instructional videos called UFile Let's Talk Tax. Okay, we've already done 2 of them on our YouTube page. Just simply look us up on our YouTube page, and also on our podcast, whether it's Apple Podcast, Google Podcast, Stitcher, etc. We also have every 2 weeks we post a podcast on some very interesting tax topics that are kind of similar to how we answer questions here. So do not hesitate to go through all of those. We try to give you as much info as we can on the wonderful world of taxation.
That concludes the event of today, the live session. We will probably be back in another week or two. Maybe stay tuned. So we will definitely have some more um, sessions of Facebook Live. Thank you very much, Jerry. Thank you,
Thank
everybody,
you.
for listening. We really appreciate it. So have a good day.
Thank you, everybody. Take care.